Everybody, sorry about that. I think that was probably at least 70% my fault, so I apologize for the delay. My name is Alex McIntosh. I work with the Natural Capital Exchange. I'm really excited to be here today and really appreciate you all inviting me to speak and share a little bit more about what we're working on in the forest carbon space. Before I get started, I definitely want to highlight two things that I think I've heard from the other speakers or observed is the value of just educating landowners, folks that work with landowners on this opportunity is really important, and everyone in this room has a lot of work to do on that front. I think project developers and folks like the folks that are working on these programs and really trying to push things forward, that burden really rests on them. So I'm really excited to be part of that today, and I just think it's been a really fantastic group of speakers so far. So I feel really fortunate to be part of that. And then the second thing I think is also, I think Tim mentioned this a couple times. Each forest carbon program is going to be different for different landowners, and everyone knows that landowners often have differing objectives and motivations and reasons for their forest management ownership, and I think it's really important for folks to be able to look across the many different options available to them before they decide which program is going to work for them. I'm excited to share about what we're working on and some of the innovation we think we're bringing to the space and the reception we're hearing from landowners, but I definitely want to acknowledge that there's lots of really good work done by lots of organizations in this space, and as Tim said, there's lots of good relationships with landowners to go around, and we're excited to be doing our part in that. So my role at the company is I work with, I lead our U.S. origination team, and what that means is we're working with landowners, consulting foresters, associations, state programs, sort of anything on the landowner engagement side of the house, as far as attracting landowners to the program, raising awareness of what we're doing, what we're working on, and also providing a really good experience for folks that are engaging in our forest carbon program, and then future programs that we'll talk about near the end of my presentation, but other things that NCX has cooking that we're excited to be making progress on. All right. This is just proving that the IT stuff was my fault. There we go. All right. So yeah, what we're going to be working through today, just an overview of the Natural Capital Exchange, or NCX, as folks maybe are more familiar with it. Also talk a little bit about the history of the company that got us to this stage. Talk about some of the innovations we're doing as far as administering our program using satellite imagery and remote sensing. Some of the innovations on our program terms. Dr. Allen mentioned 10-year accounting. That's a key part of our program, our forest carbon offering today. So talk a little bit about that. And then just talking about additionality and how we are using the combination of remote sensing and data science to try to get to really accurate property level baselines for business as usual management, which, as we heard in previous presentations, is really at the crux of how you solve for that additionality piece of forest carbon projects. I'll talk a little bit about things that we've observed over the last 12 months, the reception so far in the market, and then what's coming next with other ecosystem services markets. So at the Natural Capital Exchange, our sort of vision statement is that we connect landowners with net zero pioneers, and that's really facilitating that market transaction. And we're using technology and data science to really democratize access to these carbon markets. Historically, as many folks know, these programs and opportunities have really been hard to access for the private forest landowner, or even large landowners that maybe don't want to enter into a 100-year-long contract. Or put up the cash up front to get these projects set up. We talked a lot about the financing of these programs and a lot of really innovative things that are happening today that are helping make existing carbon project methodologies really come to life for folks, and we think that's great work. But generally speaking, there's a lot of work to be done to democratize access to these opportunities, and this forest carbon and just generally demand for carbon offset reality that we're in right now, that's something that should be really exciting for folks, and we're excited to be helping bring that to bear for landowners. So as I said, NCX connects net zero pioneers. I think I maybe said it the other way around, but you get the gist. Looks like the graphic here isn't coming through super well, but essentially I'll just kind of walk through how we sort of bring this together, where NCX sits, where all the other players and important stakeholders and partners sit here. So on the left here, we have buyers that are looking to acquire these high quality carbon credits at scale. I think I really benefited by going last today, because I can sort of skip over some of the sort of foundational context setting that all the other speakers did a really good job of laying out as far as who the different stakeholders are and partners are in all of these transactions. Well, we've actually mentioned some of these companies, and we talked about Microsoft, Cargill, Shell is a company that we've worked with pretty closely. These are folks that are looking to secure offsets to reduce the emissions and carbon intensity of their operations, and whether it be their supply chains, their manufacturing. And these are folks that are, probably simultaneously working on reducing their emissions overall, but they can't do that quickly enough to reach some of their pretty aggressive net zero targets, and so they look to offsets to help them get there. To that net zero target that they're aiming for. In the middle, we have, I'll jump over to the landowner. This is the connection here with NCX in the middle here, working to essentially bridge the gap between landowners who, if paid to do so, could change their management practices in a way that generates some of these carbon credits that can be verified and measured and monitored. And in the middle, you've got NCX working with partners like Vera, the certifying body that NCX is working with, getting our methodology approved and over the finish line with. And that allows us to, sort of be the broker in the middle here, using, like I said, technology and innovative program design to really bring this to life at scale for lots of landowners all at once. So I've said this a couple of times now, and I'm going to walk through sort of how we do this and sort of share a little bit more about how we think about how to approach permanence, additionality, and leakage, and we're using sort of a foundation of about a decade's worth of work on remote sensing to do forest measurements, how we're bringing that to bear, and how we're deploying that in our program today. So there's the program innovation side, which is, you think of program innovation, that's sort of the rules that govern these projects. I'll talk about that, and the technology piece, which I just mentioned. But at a high level, you can think about our program as being, I think, pretty unique as an offering, that it's a one-year contract for landowners, which is probably the most significant difference and departure from other carbon programs that have existed in the past. And we also have, enrollment fees for the state, and we're sort of recognizing the opportunities for making sure that landowners have sort of reduced barriers to entry, especially in terms of cost for participating in these programs. A lot of good work being done there. And then using technology, we're able to administer this at a pretty wide scale. We don't actually have to have a really big project come to life where the economics will make sense to pay for all the ground measurements and whatnot. We're able to do a lot of this work remotely using satellite imagery. The payment piece, folks, the list of questions that Tim had was phenomenal. I definitely agree with Dr. point about just the value of having these things in advance before you participate in something like this. For us, payments are looking in the range. This is what we've observed so far today at prices that buyers are willing to pay today, carbon credits, looking at between $3 to $6 per year. And that really varies. Some folks are getting a lot more than that. Some folks are getting a little less than that. It really depends on a couple of factors, which I'll talk about in a bit, which mostly comes down to the point of harvested wood that we thought was going to be moving off the property during the contract term. That's really changing that wood flow is really what's resulting in the increased carbon sequestration of the business as usual scenario. So I'll talk first about probably one of the more complex parts of our program, which is ton-year accounting, and it's in a way it's straightforward for the landowner. A one-year term sounds pretty appealing, but buyers also really need to understand that this approach can solve for one of those critical pieces of the carbon program, which is permanence. And so, as we heard previously, permanence typically is thought as like a long-term easement on a property. That's one way to achieve what these traditional projects are trying to do, which is to deliver a certain number of years of impact and then the carbon sequestration or carbon storage that comes along with that. What we do is we break apart that delivery schedule into what we're called ton years. And you can think about delivering that 1 ton held for 100 years in a row. That's one way to do it. Sequentially, 1 ton per year stored on the landscape above a business as usual scenario. That'll get you to your full delivery of a permanent ton of climate impact. Another way to do that is to break apart the ton years into their units that they can be delivered in a year at a time, and then figure out how many of those you can increase the delivery of on an earlier schedule, and then have that result in equivalent climate impact that you could get if you were to do 1 ton for 100 years, sequentially 1 ton at a time. And so there's a conversion rate of understanding if you can accelerate that sort of high magnitude of carbon sequestration over a shorter period of time, there's a conversion ratio that we think exists where if you can quantify that, you can quantify the climate benefit and climate impact that you're able to derive over just a 1-year period. That's really what 10-year accounting all comes down to. And it's something that was introduced actually, I think, through the International Panel on Climate Change, and I think came out of the Kyoto Protocol, and it hasn't really been widely adopted yet. And we're trying to push the ball forward with respect to using this in our program design. So that's some of the innovation on program design. Now I'm going to talk about just really technology, and this is where we've really been investing as a company for about 10 years. Previously, NCX was referred to as Sylvia Terra. Did a lot of inventory projects, doing acquisition, or helping big firms do acquisition diligence, understand their forests better through in low-cost ways. And so, what that has allowed us to do is to develop what we call our base map, which is our high precision inventory layer of the contiguous US. You can kind of see part of it here. We're using lots of different sources for that, publicly available satellite data. We're using national land cover data set to help us understand forested areas versus non-forest areas. We're using a lot of FIA data. We're big fans of the FIA program. And then over the years, we just collected a lot of ground measurements to help us true up our remote sensing models for this. As the final bullet point says, there's a lot of computing power here as well, and so that's took us a long time to be able to run this at the scale we need to be able to deploy this layer of inventory measurements and assessments across the landscape. But what that allows us to do is to be able to take a shapefile or allow a landowner to select their property boundaries on our online platform and pretty quickly get to an estimate of the inventory, the standing inventory on the property, and understand what of that property inventory is merchantable, and then understand, using some of these factors here, what we think the business as usual management scenario and harvesting levels would be on that property. So we look at the ownership type. We try to understand if this is the type of, if it's a family forest landowner, is an industrial ownership. They're going to have different management objectives. Obviously, the species mix is going to be a huge factor here as far as determining when that wood's going to be moving to the mill, because differences in rotation age, both regionally with the same species or in the same region, different species. So obviously lots of complexity going on there. Another really obviously important factor here on how wood moves across the landscape is access to markets. That's a really critical piece that we pull into on our models on a quarterly basis. There are changes in prices and that's influencing management practices and sort of likelihoods of harvest. And then, as I just alluded to, generally speaking, understanding the market conditions and how that's resulting in changes in management or just sort of creating a pretty predictable practice. Looking at plantation pine management in the Southeast, there's a pretty steady understanding of when wood's going to get cut. So we have a really good understanding of how we can get incentivize folks to extend that rotation a year at a time and be paid to do so. And then we can also understand the economics that they're being faced with if they were to decide to do that. So I'm actually going to skip ahead to this slide, and I'll go back to that last one. I talked about the property level baseline for each individual property. Historically, forest carbon projects have, and this is especially true in California trade methodologies, they're using pretty coarse regional baselines for growth and management. What we try to do is really get down to the property or ownership level to understand the additionality at that scale. This graph, or the picture on the right here, tries to highlight that visually. This is a county in Pennsylvania that we did a pilot program back in 2020 where we looked at just the individual level baselines that we thought existed. And we're trying to do this at a much greater scale, and excited to talk about challenges with doing that and sort of moving quickly while also making sure that the quality's there. That's definitely a tension we feel. And anyway, this is I think a good visualization of what I'm talking about, those property level baselines. So on the harvest risk side, again, for this to really work and be a viable program long term, NCX needs to get better and better, and programs generally need to get better and better at predicting the business as usual. That counterfactual, it's hard to get right. It's tricky, and tricky is maybe an understatement. But we're trying to use as much as much data available to us, and especially publicly available data is important for the verifiers and certifying bodies like Vera to be able to get in and understand the information, the data that we're pulling into our models, and have that be available to other project developers who might ultimately use the NCX methodology in future years. So we're using data. The chart on the right here looks at observations of FIA plots that can show us sort of what the removal rates are of the above ground biomass on those different plots. And that allows us to really get an understanding of sort of the shape of harvesting and the intensity of that harvesting across the landscape. And again, the FIA data set is really valuable for that. But that's not all we use. We also use survey data from National Woodland Owners Survey and other just publicly available sources. Like I said, this has to be stuff that other programs can potentially use in the future if they wanted to adopt our methodology. But essentially what we're trying to do is predict that percentage of the above ground biomass that's going to be removed from the property in the next 12 months, or could be, or likely would be removed in a business as usual scenario. And then we also have to understand the probability of that harvest event occurring. And that'll change depending on the ownership. A really big ownership, they're probably harvesting a lot every year, but they're not necessarily harvesting as much as if it was a smaller property that's harvesting more episodically, but taking off a lot of, or a greater percentage of that total merchantable volume when they do harvest. So, at the really wide end of the spectrum, you've got industrial ownership that's managing for an even flow of wood. There we can nail their harvest schedule pretty well, but as you get smaller and smaller, trying to predict what's going on in the mind of every single landowner in the U.S. That's pretty hard to do. But we're working really hard on incorporating as much data as we can in local context to try to get that right. And then at the landscape level, we think we're doing a pretty good job. We can aggregate all that together. So as far as what we've done so far in the last, I guess, 14 months or so, we ran our first commercial scale cycle starting in the Southeast in the spring of last year. And then we've since rolled it out to more landowners in other states. We moved up from the lake states. And then we've also, in the most recent cycle, we had participation available for the entire lower 48. And so we've worked with, I think actually, that this number is now closer to 2,500 landowners that are under contract to defer timber harvesting. And we've enrolled close to 4 million acres of mostly, almost entirely private forest land across 38 different states. And that's not to say that those states or those 4 million acres are seeing no harvest activity. We talked about how we allow for, similar to other programs, the ability to dial back on harvesting. It's not going to go up to an industrial ownership and say, put away the iron for the next year. That's not going to work for them. But if you can meaningfully reduce their harvest schedule below what they maybe were going to do otherwise, then now we're talking and we're able to generate some real additional carbon. Of those 2,500 landowners, I think in this most recent quarterly cycle, I know we did assessments for over 100 landowners based in Arkansas. And we've worked with great consulting foresters in Arkansas and just generally in this region. I think we're seeing a lot of interest and possibility in these participation opportunities. On the average, I think our average versus median is pretty different here. The average landowner size is in sort of the 700 acre range. Median landowner size is in the 250 to 400 acre range. So just gives you a sense of the types of folks that we're working with. And this is a map. Everyone loves maps. I think this was in our winter cycle, the counties in which we had folks participating, or at least who could have participated by selling into the exchange at the current price. For one interesting example, like we had landowners in every county in Mississippi get assessed in our program, which is pretty exciting. I think speaks to the power of our ability to get out there really quickly and do lots of assessments for folks, but make it straightforward with low barriers to entry. So I'll talk now about just sort of the basics of how this program actually works from a landowner's perspective. First of all, landowners enroll we have actually stopped saying enrollment. We just say requesting an assessment. Enrollment sounds like a kind of big commitment. Really what you're doing is you're submitting your property boundary shapefile, finding your property in our online tool, and requesting your free assessment. And what we're doing with that assessment is all the stuff I just talked about, which is understanding the inventory, all the specs of merchantability in your property, in your markets, and trying to understand and come to a rules-based objective baseline of removal volume in your specific scenario. So that's what I just jumped ahead there. That's what the assessment takes into account. Then landowners are given the option to choose the price at which they'd be willing to defer their harvesting. And this is where the economics get pretty interesting, because for someone who's sitting on maybe $5 an acre pulpwood, or for pulpwood, their economics to defer will be very different than someone who's sitting on a really nice, mature soft timber that's being sold into a strong market. The cost of delaying that cash flow by a year will really differ between these two examples. And so that's why we let landowners essentially bid in a price that works for them if they were to defer harvesting by a year or the cash flow by a year, or defer the option. In the case where we predict very low likelihood of that occurring, but it could happen, our assessment will try to account for that, and you probably get a fewer number of eligible units to sell into the exchange as a result of having predicted medium or low likelihood of harvest. But if you're committed to not doing harvesting, you can sell that into the exchange. Landowners then go through the deferral process. We do some ground measurements. We can't do everything with satellites or LiDAR. LiDAR is pretty expensive. We don't currently incorporate that into our models. So we do some ground measurements and plots on participating properties. Those don't necessarily change your initial assessment results. They just help us dial in our predictions of volume, of standing volume on that project area as a whole. So we work with contractors across the US, firms you've probably all heard of, like F&W here, for example, and then we do some audit cruising as well with folks as well. And then on delivery, when landowners have been able to verify that they have, after the 1 year, they've delivered that deferral commitment, so the volume that they said was going to be there relative to their business as usual. Once we confirm that's been delivered, landowners are paid. And then they can, if they want to, they can participate again. But to participate again, you would want to get reassessed, and then we would be taking into account the fact that you just done the program, and then you'll get your results back, your assessment, and you'll be able to sell into the next version of the exchange. We've talked a bit about the expected increase in prices that buyers will be willing to pay for these credits. And one of the things we really like about the 1 year program is that landowners can sell today, but then they can know a year later they'll have the opportunity to sell into sort of the next market rate, which could change and could go up. We hope it will go up. I think everyone expects that it will, just sort of a matter of when that happens. And we like that landowners maintain that flexibility by participating in our program. So actually, I had this slide a couple hours ago while I was listening to one of the earlier presentations. I think there were some good questions about how other programs can influence someone's ability to participate in a program like ours. It's a really good question. A couple things here. First of all, for the NCX program, at least, the landowner or participant needs to have the timber rights. To be able to decide to not harvest, you need to have the ability to decide to harvest. So it's a pretty basic one, but it's an important one to remember just at the very outset. Secondly, if that easement that they're in already restricts or limits harvesting, then property wouldn't be eligible for NCX, because participating in NCX after having already committed to reducing or eliminating harvesting on the property would basically zero out the additionality from the NCX program. So that's spelled out in some of our program materials and in our contract, but that's another really important one. Another question we get a lot about those are programs that encourage harvesting or timber state improvements or require you to have a management plan. A common example of this is some of the state current use programs that require you to get set up with a forest or have a current and up-to-date management plan. Those are actually pretty good for NCX, because it indicates to us that as a landowner you are really looking at actively managing for a working forest and for a timber harvest. And that means that participating in the NCX program, that could meaningfully change the behavior away from, or at least in the short term, away from some of that harvesting activity, which for us, we think is a good signal on the additionality side. Another thing I want to call out, I mentioned consulting foresters earlier. Consultants have been can't say enough good things about consulting foresters as with respect to how they've helped us both reach landowners, but more importantly, just help us ensure that we're developing the program in a way that makes sense for what's actually happening on the ground. And that local context is really important. That feedback loop we find to be really valuable. So we try to spend as much time as we can internally engaging with foresters, hosting webinars, hearing their feedback, and then incorporating it into how we improve our program over time. Similar to with the current use program example I just gave, a consultant and a landowner having a good relationship typically means that landowner is going to be teeing up for a timber harvest, and that is something that we think is exciting, because if we can be part of that conversation and ultimately be a tool in the toolbox for that consultant as they're putting together their management plan, and we think that's sort of a win-win-win for everybody. That tool in the toolbox language that we used in the past or in previous presentations, that really resonates with us, because we don't think that NCX has all the solutions for every management decision for every forester, every landowner, but we do think that it's a valuable tool, and we're excited to be in that toolbox alongside many other programs that folks represent here. Going on the end here, certification has been brought up a couple times today, and I think I would echo what everyone else said about the importance of this for a number of reasons. Like, first and foremost, it's just having a third party that's making sure that all these rules are making sense, that these programs are having the intended climate benefits that they're claiming they have. It's really valuable. It's really valuable for long-term things that folks want to achieve. It's also valuable for ensuring that buyers are excited about paying for, or making sure that buyers feel like they have the information they need to make decisions with their significant budgets that are being tied towards these offset opportunities. NCX is working with Vera, our standard. Their methodology process, I think, is pretty stringent, which we think is great. We had our methodology concept note approved in, I guess it was last summer, and we submitted a full written version of that in December. Unsurprisingly, we get a lot of work done in December there for the holidays, but now we're really into the meat of it. We went through some internal revisions of Vera, and next month we're scheduled to have our public review period open up, which will allow for all sorts of folks that are experts in this stuff to weigh in, tell us where they like what we're doing, tell us where they think we're wrong. We can go back and forth in dialogue and ultimately tighten up a couple things before Vera will be certifying sort of the final stamp of approval on, we think, the June, July, August timeframe. So we're really excited about this sort of being the coming up to the end of the chapter with the Vera methodology process, but they've been great partners to work with, and it's really forced us to get really clear on some of the really critical things we talked about here with permanence, functionality, and leakage. As you can see from this quote here, the Vera team is really excited about some of the innovation we're putting forward, especially around 10-year accounting and opening up access using remote sensing technology to really bring down costs for landowners and make this something that could really scale pretty quickly. So I think this is nice. Yeah, that's my last slide. So I touched on this a little bit at the beginning. When we went from Sylvia Terra to the Natural Capital Exchange, we did so intentionally. We kind of skipped over Sylvia Terra Carbon because really the exciting future we think for our company and for forest landowners generally is the ability to live in a world where forests and the ecosystem services they provide are all on an equal playing field. And that includes timber, absolutely includes timber. Carbon via harvest deferral, carbon through afforestation, reforestation, wildlife habitat, wildfire risk mitigation. All these are things that landowners are managing for in their foresters and their state programs. Those are helping them manage these things, and we want to be part of that and really deploy this ability to efficiently measure and value all the forest ecosystems services. We want to be able to deploy that across the landscape, and that's really what we're excited about doing. And I know there's probably future conversations we could have with this organization on just how to make sure that we're keeping folks in touch as we get into some of the wildlife habitat restoration, some of the water stuff, certainly afforestation. I've heard a lot about that today, reforestation. So yeah, we're excited to be here today to start some of those conversations and make some of those relationships. And with that, I will wrap up. There's my email here. I unfortunately left my business cards in the hotel room this morning, so someone else has those. But you can take a picture. It's also easy to remember Alex at NCX. NCX turns out it's much easier to spell than Sylvia Terra, although I personally like the old name a little bit better, but wasn't my call. Anyway, thanks everyone for your time. I guess we're doing the panel next, but yeah, really appreciate the opportunity to speak today.